Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over data. And so here we are looking at SoundHound AI, ticker symbol SOUN, recording this Friday evening after SoundHound closed at a price of $10.97, being down over 28% on the day and continuing down about 1% in the after hours. So as we can see here, a pretty big gap down. And so I was not planning on going over this chart today, but there were some signs that it was forming a bull flag. It could be breaking higher, but then we get this kind of surprise to the downside. And so I'm very curious to kind of look at the chart as well as look at some options data to see if I think this is a buy the dip opportunity or if this will be fading lower. And yeah, so I think that this is a really interesting chart to be looking at. And I have to say that my attention to SoundHound, I've covered it before, but really it just comes from this video that Colin Gladman put out yesterday. I'll put a link to it in the description of this video if you want to check it out. The title of it is Tesla and Friends Recap, February 13th, 2025. And so he spends the majority of the time talking about Tesla in it, but he does go over the SoundHound chart and does have this, what could be interpreted as a bull flag or a descending triangle, which it looks like that's what it's ended up being. Descending triangles tend to break to the downside, but you could also view this as a wedge that, maybe it breaks to the upside or downside. And of course, we have seen with that 28% gap down it's a descending triangle and it has broken down. And so I just kind of wanted to point that out. I encourage you checking out his videos. Also subscribe to his channel. He does way better analysis than me, has a lot more experience. I learn a lot from him. I'd encourage you to subscribe to his channel and check him out on X, Colin_Gladman. Very straight shooter and a really good analyst. So I'd encourage you check him out. But then coming back over to the chart here, there are a couple things I wanted to point out, and one before I throw up drawings and add up some new ones. This, to me, makes me think this is a dip buying opportunity, and that is, while we have seen this big move down, and that's associated with a lot of volume, that makes me think, oh, well, if volume is going up as this is coming down, it's probably going to continue. However, if we look at the candle pattern for the day, it is a spinning top with a very narrow candle. Let's see, the opening price was at $11.14 and it closed let's see, 17 cents lower than that. So it's a pretty tight range. And with that being said, this large volume makes me think that buyers were stepping in to hold that up. Pretty dramatic gap down. But it wasn't a wide-ranging candle, something like over here where it starts to move down and it's just selling to the end of the day, and then that continues. What we have here is buyers stepping in to lift that up. And I do believe that this is on the news. I should point out that NVIDIA is reducing its stake in the chipmaker Arms Holding, but also I believe something related to NVIDIA and SoundHound as well. But anyways, I don't really get into that stuff, so I'm just going to kind of leave it. You guys can look it up if you want. Just wanted to dive into the chart, the data, and go over that. But some other things that make me a little bit concerned that this could go lower is that we have broken below the, let's see, 21-day and 50-day moving averages, but we are above the 200-day moving average, which is at 790. Maybe this could be coming down to around $8 a share, but because of this spinning top here, because of that large volume pushing this up, I do think it will bounce. But I, of course, could be wrong. Earnings are coming up on the 27th, so kind of, a precarious stock to be trading right now. But anyways, I'm going to throw up some drawings that I had previously put up there, and then I will add some more to kind of replicate what Colin has had drawn up there from his video from yesterday. And so, yeah, just looking at this, we got this nice little purple line. I had previously drawn that there. Kind of curious, why did I pick, 1025 there, and the low for the day was 1040. So really, just kissing that level. Why do I have it marked there? And so if we do take a step back and just scroll over to here, what we can see is this looks like it is a cup here and a handle, or you can think of it as like an inverse head and shoulders. It's just, the giant inverted head is missing the left shoulder. It's a shoulderless inverted giant. We got the right shoulder over here, or the handle over here. We got a very nice breakout. And actually, one thing that we can do is just take a measurement from the bottom up to that neckline to see where we would expect price to go, just getting that midpoint right around that neckline. And we would expect price to go up to around $18, $19. We got well above that, hitting a high of $24.98. And so, that was euphoria. That was a lot of excitement up there, and we've just had to cool off a little bit. So we have exceeded this measurement, and now we are potentially back in a dip buying zone. And another thing that we can do, and perhaps let's see, maybe this is a better way to get a measurement of that, because not only do we have this purple line, the neckline going across there, we also have this white downtrend, and that does intersect over here, forming a cup and handle. So maybe we take this measurement just going straight up to that cross section there, and maybe that would line up with right around $25. And so let's see. Nope. We could have expected a little bit more, but kind of considering that it's in between this horizontal purple neckline or brim, I guess I should say, if it's a cup and handle, and this downtrend, since it's right in the middle there, I think that's a pretty reasonable measured move from this breakout. And now what we've seen, getting back above the prior highs, that's this red line here that was 1814, having gone up well above that level, we are now pulling back to this neckline, the scene of the crime that we broke out from. It is quite possible, though, that we break lower and we actually test this white downtrend as the scene of the crime over here. And that could be coming down to $7, $6, $5 a share, somewhere around there. But I think that's unlikely considering the large amount of volume kind of boosting the stock price above that purple line. So I think that this looks like a nice dip buying opportunity. I think it could fade to 8, finding the 200-day moving average as support. So good to be prepared for that possibility, especially with earnings coming up. But I think that this is a dip buying opportunity. And just one other thing that I should point out is this other trend line that I have drawn here based on the lows going up. This is an uptrending level of support. And so if we do break below 1025, if we do head down to test the 200-day moving average at $798, that might coincide with this uptrend. So if we do break below 1025, we could potentially be coming down, maybe another 28% or so. So good to kind of, just have a plan for if that does happen. But like I said, I think that this is a dip buying opportunity. And one thing that we can do with this, so Colin, how he had it drawn over here, this was with a flat baseline. So this does form a descending triangle. What we might be forming now instead is a falling wedge, still a bullish pattern. And so let's, kind of draw what that might look like. And actually, I was going to draw up what I thought Colin had drawn up, and then I decided to pull up what he had exactly from his video. And so one thing that we can do is just draw a trend line. This is what I was thinking, is that there's this downtrend. Just going to make this a little bit thicker so we can see it better. Intersecting with the high of 24.98 from December 26th. Got some wicks up to that level. Basically, a pivot high from January 24th, being at a price of 17.65. Testing that level, getting rejected, and then we, pull down, then break above and retest before going higher. And so that's kind of what I was expecting to have drawn over here. But, that is, in fact, not what he had. He had something more like this. So we can see that has been, downtrending resistance, and we weren't able to get above it. But one thing that he did have that I'm going to fudge a little bit, I'm just going to take this trend line over here based on the low from December 11th. That was at a price of $12.70. I'm just going to draw this line across, press the shift key. So that does make it horizontal. And so we can see this very nice horizontal line there, very similar to what he has drawn over here. Okay, and so this looks like a descending triangle. And just to, prove to you guys that it is a bearish pattern, let's just head over here. I don't know what this is, donut cupcake day? I don't know. Oh, Valentine's Day, that's what it is. And so let's look up descending triangle pattern. I'm like, how do I spell descending? Okay, yeah, so the AI overview is that a descending triangle is a chart pattern that indicates a downtrend in an asset's price. It's a bearish pattern that's often used in technical analysis. And so if we just pop open this image, we can see this downtrend. It has been trading like that. That's to form a continuation lower. And so while that's not the exact same that we have up here, because this has been, a move up following this consolidation, so it's not really a descending triangle in that sense, but we do have this flat line here. It gets tested multiple times. Eventually it's going to break, and that's what we have seen. But what we can do, which I'm actually really excited about this, I have not drawn this before, but if I just move this down to intersect with today's low, so Friday the 14th's low, and then, just kind of fudging this, having some fun with it, going with the highs from December 6th, just being kind of arbitrary there. But we did see that acting as some resistance before we broke below it, and then with strength on December 13th, broke above to hit these new highs, pulled back, tested that as support over here before bouncing. And then with this gap down, I'm actually going to draw a line going across there so we can see that gap. And so the high from yesterday, so from Thursday, was at a price of 15.43. And so I'm just going to make sure that line is correct there, off by a few cents. So 15.43. That was sorry, that's the high. I want the closing price, 15.25. I had that correct before. My bad. So 15.25 was the close, not the high. And I'm just going to make that line dashed because the gap has not been filled. Make it a little bit thicker and make it blue so we know there's a gap there that needs to be filled. And so now if I just pull this line over here a little bit more and then just extend this one, it looks like we have a falling wedge, and we're testing the bottom of it, coming back to prior resistance, the neckline or the brim of this cup and handle. Let's see, the pivot high from this date, which was March 14th, so Pi Day of last year. We're coming up to the anniversary a month from today. So Pi Day, March 14th, the high was 1025. So that's exactly why I have that level marked there. And we've retraced to it. And so I think that just looking at the chart here, given that other analysts who are way more skilled and experienced than me were viewing this as being a bullish pattern, we got some news, we got a breakdown, a gap down, but this, in my view, has really come to a very nice technical level. I think people looking at this will see, hey, the 200-day moving average is at around $8. I think this is going down $3 more. Also, we have a lot of volume on the down day, so it's probably going to continue. But like I said, that means that buyers were pushing this up. So we weren't seeing candle patterns like this with it just dropping. That got lifted up by this volume, buyers stepping in. So I think this looks really good, and I think that there's potential even just getting up to the top of that wedge. That's about a 23% move just to get up to there. And then let's see, if we go up, I'm just going to draw up what I think could happen. Maybe we go up to that level. Maybe, we pull back down, retest 1025 again, and then maybe at earnings, we get up to the top of that. Earnings are good, let's say hypothetically, who knows? And then we launch up maybe through that gap, get rejected from 1814, come back to test 1525 as support before getting back up to those all-time highs. And so that is, of course, just a doodle. This is probably not going to happen, anything like that, but I find that compelling. And even if it's just for a 20% move up to the top of this falling wedge, I don't think that's too bad. That could also happen before earnings, so I think that looks really good. I think that this looks like an opportunity. I think if you're scared, it's scary. It's tough. But, look at over here. When we were back at that line over here, that was a great dip buying opportunity. Just like, over here, that was a good opportunity to add before going to new all-time highs. And so I think that's what we could be seeing with this. And then I did want to come over to the data here from Unusual Whales. So this is just looking at the net call and put premium along with the volume of these contracts traded for the day. February 14th, we can see SoundHound up here. And so I just kind of want to go over this, give you my interpretation. I'm still kind of learning how to analyze these charts, but I think that this looks really good. And so what we see in the volume down here, waxing and waning between net selling of contracts, net buying of contracts, net selling, and then ending the day being positive. And so we did have, a lot of indecision here with the net call premium going up, coming back down, going up again, whereas the net put premium up a little bit, but then it just kind of faded lower. And so with the green being the net call premium, that's positive. That's over $2 million going into call options. Net call premium going up by over 2 million. That looks good. And then we see the net put premium coming down, being negative. That means people are getting out of puts and getting into calls. So I think this looks great. We do see that the stock price in yellow just kind of bounced around a little bit during the day, but then just kind of settled out here. So I think that looks not too bad, especially with this day being a massive gap down day. And so what we see here is the increase of net call premium, and we can see the numbers over here. Net call premium increased by $2.41 million, so that's a lot of money, whereas the net put premium decreased by $603,000. So more than $500,000 moving out of puts, and nearly $2.5 million going into calls. So that makes me think, this is, bullish signals that we're seeing here. And if we do scroll down here, we can just see that the bear bull slider majority is on the bullish side. So that's about 47%. While that's not a majority, we do got some of this neutral there. And just looking at the data here, with the net call premium going up, with volume going up, suggesting that more money, more buying of calls is taking place than the selling of puts, which that of course is bullish there, seeing the selling of puts. But if we'd see more net selling of puts than net buying of calls, that may not necessarily mean that it's bullish. That just might mean that it's forming a bottom. And so what we see here is, I feel like this is more bullish because more money is going long than is getting out of being short. And then if we do look over, just to get to a little bit more data on here, just to get a little bit more perspective, if I flip over to the past 7 trading days, what we can see is, we've seen it kind of flat with calls and put premium, net call and put premium, not being too elevated or decreasing that much until yesterday on the 13th. We saw net call premium going up by $3.23 million, whereas net put premium came down by over $1 million, down by $1.07 million. So that, again, just like today, is bullish, with net buying of calls increasing, the net amount of money going into calls increasing, that call premium going up, whereas we see the net put premium coming down, being negative. So that's a lot of people getting out of their short positions, or a lot of money getting out of short positions, and even more money going into long positions. So over the past couple of days, this actually looks bullish. Even with the gap down, we see the yellow line, the stock price dropping down from the 13th to the 14th. That's that gap down. Even with that, people are buying up the dip. People are going long. This news is not a big deal. And then also, just taking an even further step back, looking at the past 30 trading days, what we can see is we have seen, some blips in the past of net call premium coming down. Let's see, on January 7th, the net call premium came down by more than $4 million as the stock price is coming down. And then as the stock price in yellow starts to go back up, we see net call premium increasing on the 21st of January, going up by more than $4.6 million. But we also saw on that same day net put premium going up by $1.7 million. So, kind of, varied signals there. And so with all of this, we see the stock price being at all-time highs, coming down, starting to form this falling wedge, putting the highs in here, pulling back again, lower highs. And then now we've kind of fallen off a cliff over here. But that is what I think, to form the bottom of this falling wedge, with the net call premium going up, the net put premium coming down on the order of millions of dollars here. I think that looks really good. And so what we're seeing in the chart here, I think this is just a pretty massive falling wedge. And, just to kind of get a time frame on this, of course, all of this is approximate, but from the 14th going over to the tip of this falling wedge, that would be getting to around March 13th, right around Pi Day, just like we saw this notable Pi Day back here when we were at this purple line. We might see another notable Pi Day coming up a month from now. And I think that all of this, what we're seeing, if we do trend lower, I think that is just, being at this really nice dip buying level at the base of this falling wedge. And I suspect SoundHound will be filling this gap at 15.25. And let's just get a measurement from current price up to there. That's around almost a 40% move to the upside, getting to 18. and that's around a 65% move to the upside, and then getting back to those all-time highs, that's over a 100% move to the upside. So yeah, I mean, for me personally, I'm not looking at any contracts to buy for this. I don't have a share position, but I'm intrigued to establish a small share position and maybe to ride this up for a breakout retest like I had doodled up here before we get up to, these all-time highs again. So yeah, I mean, I think this looks really good, and just looking at this volume, it makes a lot of sense that this is the bottom, or that it's near the bottom, and that this is still a bullish pattern. And I would argue actually looking more like a bullish pattern, a falling wedge, than if this was a flat line looking like a descending triangle. So yeah, I think that this looks like a dip buying opportunity. So I'm excited by it. I'm not panicking about it, and I think that this is just a great opportunity for a stock that has performed well. And I think this is just part of the cycle of shaking people out. And so yeah, I'm excited. I hope you are too. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and have a great weekend. Take care, you guys.